Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to talk about how to find the best growth stocks and how to play them. Growth stocks are currently the stock market's favorite, outpacing value and dividend stocks since the March lows. Many growth stocks like NIO, Meituan-Dianping, Afterpay or TED more than 5 to 10 times their market cap since then. Those of you who are long-term followers of my channel know that I have recommended NIO at around $3, Meituan-Dianping at around $8, Lordstown Motors at around $13, or TED under $1. It can really help you if you go through those older videos and check why I have bought into those companies once you have finished with this video. How can we find these growth or spec stocks? Here are some things I'm looking for when buying a spec stock. The most important thing is to understand the business model and how the company is or will make money in the future. I can't stress enough how important this is. Many investors just buy a stock without knowing what the company is doing. This is 100% a recipe for failure in the long run. You might be lucky once or twice, but in the long run you will fail. Understand how the company will disrupt its targeted industry and what value proposition it has compared to the competition. What is the company offering that the competition is not? The company has to have either a great product or a service that consumers really love and that they are enthusiastic about telling or recommending to their friends and family. The bigger the market for the product is and the easier investors can understand the business model and product, the more potential the company has. When growth stocks have a good story, they attract a lot of capital from investment funds and retail investors. Once you have found such a company, read everything about this company to really understand it so you know exactly why you have bought your shares. If you really understand the company, you don't panic sell when the stock price suddenly dumps for no real reason. In the case of NIO, for example, the stock price dumped to under $2 at one point, and many people who sold at a loss at those prices are kicking themselves right now. But investors who understood the company took the opportunity to load up on shares or hold tight through those rough times. Learn how to read a balance sheet and financial numbers to understand if the company is undervalued or overvalued at any given time. I am a conservative investor and I like to invest when the public hasn't realized the potential of the company yet. At this stage, the risk is quite high, but you can maximize the returns on your investment. If you are early, the stock price could double or triple quite easily. That is the point where I sell 30 to 50% of my shares to reduce the risk and leave the rest of my shares for the long run until the stock reached its full potential. Sometimes the stock price is overreacting to the upside. That means finally investors have discovered the potential, but now a lot of hot money is flowing into the stock and pumping the price way over its fair value. It can take a while until the market finds out that it takes longer for the technology to disrupt the industry or sales numbers aren't growing as fast as investors have believed. An example for that is Amazon during the dot-com bubble. During the dot-com bubble, investors believed that the internet would revolutionize the world, so they drove the valuations of these internet companies to insane levels until the market realized that valuations and profit do matter at some point. The internet stocks and also Amazon dropped by more than 80% from the peak. Many companies went bankrupt and only those with a solid business model survived and grew significantly. When valuations are totally insane, it is also not a bad idea to take at least some profits off the table to invest into something else until valuations normalize. You can take the profits and put it into dividend stocks or other value stocks until the valuations of that specific company normalizes again. Keep in mind that many investment funds can't buy into small cap stocks or stocks that are under $5, and on the other hand, retail investors are waiting for their purchase until more and more people are talking about the stock. So if you look around and keep your eyes wide open, you can definitely find those small companies with a great product that have the potential to grow very quickly and position yourself earlier than most others. Furthermore, check out the management of the company. Does the management have enough experience and knowledge to run the business? Is the founder still involved in the company and are his interests aligned with that of the other shareholders? Who is backing the company? NEO, for example, is backed by Tencent or Bailey Gifford. These big investors are giving other investors and funds the green light to invest also. Some companies like Tencent or ARK Invest have really good track records with their investments, so it is wise to check their investment portfolios and analyzing their stock picks. Screening sites like Finviz are great to filter through a lot of companies with the criteria you're looking for. You have to dig through a lot of numbers and companies to find one you really like. I'm also following many other YouTubers to see what they are investing in. Maybe there is one company that you have missed and someone else gives you some good arguments as to why that stock is a good buy currently. It is always good to be open-minded and keep your eyes wide open. If you invest in growth stocks, never forget your risk management. Most of these companies are unprofitable and losing money, so only invest an amount you can absolutely afford to lose. Remember, buying something, not only stocks but anything, is very easy if you have the money and only takes seconds. But selling something is where it gets tricky and most people fail. The key is the price. Be patient and buy stocks that are undervalued or not recognized by the market and sell a portion of it to take out your initial money once the stock is overvalued. You don't need to chase after every stock to make a little bit of money. Really check if the company you want to put your hard-earned money in really ticks all your boxes. There are 1,000 mediocre stocks out there, so just concentrate on those with the highest potential. Everything in this video is just my own opinion, so always do your own due diligence and never follow blindly just because someone said the stock is a buy currently. If you have learned something in this video, please hit the like button to support the channel, subscribe for more stock picks, comment and share. Bye guys and see you in the next one.